Good morning, it's Harvey Jackson. Just going to get through some of the news items here. One that caught my eye is just the resurgence, or just to bring back to the top, the China to rule by March 9th on the Canadian canola anti-dumping. There's already been politicians over there. Carney's had a visit to reduce the levies that are on canola. Levies, duties, tariffs, all sound the same kind of crap to me, but it went from 84% down to 15. Still a tariff. And the other thing that I've been telling clients as well, 15% tariff on state-owned companies like Sinograin and Cofco. They don't pay the tariff to the government. They are the government. So, and that's how the soybeans are getting purchased in the the 12 million and the 8 million metric tons that are apparently getting bought. It's all getting bought by state-owned, so they're not paying any tariff there either. But let's just get into this. You can see that there's a price differential. This here is the European rapeseed priced in Canadian dollars, and you can see that there's a gap price differential between the two. And here it is the differential. And when you look at where we currently are, you would say that we are kind of median in the middle here as well. So and what it is the European rapeseed minus the Canadian canola. So the bigger the difference, then there's dumping, right? But I really can't see over the last 10 years that there's been some huge, bigger price differentials, but we're kind of in the middle of that choppy trade there anyway. The Indian farm products are kept out of the deal. It's like 90 to 95%. They still have the mention of the soybean oil, but when you see soybean oil prices still continue to go up and you've got palm oil going down, they are a value buyer just like China. Other news here, the jobs numbers came out yesterday because of the partial government shutdown that should have been on Friday, and it was favorable numbers for the jobs, and there's expectation that there's going to be even less chances of numerous rate cuts that Trump wants, and we'll have to see how this Friday's consumer price index comes out as well. China had their consumer price index, and it's actually pretty abysmal, and it's very small growth, so it's basically in some sort of recession. But you have to see how this all plays out here. Their economy is got lots of production and not as much consumption. Weather looks like it's going to turn colder over the prairies, and as you can see here, the Great Lakes are still getting pretty cold, so that's why I went to this, and just to see the price or the ice over the long-term average. It's building, but it's pretty choppy here. You can see that there's 43% ice cover, and of course all the shallow areas where the locks are, that's where there's no transportation going on at all. Just different weather models showing the same thing, moisture there, but actually what it's also showing is a deficit up here, and it's going to allow for planting, for the second season planting, but it's also allowing that harvest to maybe progress a little bit faster than normal as well when they are dry. Quick look at the markets here. Canola is up a couple bucks. Rapeseed is up like 3. Soybean oil is up again at 57.43. Soybeans are up 13 and a quarter at 11.37. Spring wheat is up a couple cents, and your hard red winter is up 3.5, and Chicago is up 2.5, and corn's up only a penny. Canadian dollars unchanged. Nice move up here. You're at the top end of the range on your slow stochastics, and on the November, you're actually matching this value all the way back in September, getting very close. This is a sell whenever we get to the top of these kind of areas. I'm not saying it won't go through there, but to add on to more sales would be prudent as we get up here for sure. European rapeseed making new highs here basically in that same kind of timeline. Soybean oil futures peaking above those values that we made back in last July. And a lot of that is just, hey, now we know that there is some guidance here, and for sure that there's going to be some, renewable fuel is going to get somewhat rewarded, and we're getting closer and closer to a decision that's going to get finalized. Soybean oil just in a shorter timeline. Crude palm oil, this is where you got the price differential, and you got this going down. So you got the Chinese and the Indian buyers that are value buyers. They're going to be buying this product because it's getting cheaper, while the soybean oil is getting more expensive. They don't tend to be buyers of the most expensive product at all times, that's for sure. Crude oil and your Harbor Freight are both got this tail going down here so far. I just want to show this because you can basically you see the 2000s, and you've got crude oil production increasing over let's call it 25 years or better, and this is our refining and our refining throughput. It's just a brain dead government. We have to import fuel from U.S. and other places because we don't want to build a refinery because we're so scared of the environment, and we've got so much environment regulations. It's just brain dead government, that's for sure. Canadian dollar, it's actually resurging here as well, and you can see the U.S. dollar index is actually, and this is down to a 5-minute chart, so it's still a trend up here since it's made its high. The gold trying to resurge. Same thing with the silver. It doesn't feel like it, but we're back at $83 right now. Quick look at wheat. It's caught in this channel. We're probably in the bottom third of that channel. When we do have green days, it feels good, but it's sure not breaking out of this. We need it to break out of that channel. Same thing with the French or the Kansas wheat. It needs to break out, but we're at the top end of that channel, approaching that 200-day moving average. Chicago wheat getting closer to the 200-day moving average as well. Corn futures seem to have a resistance value on these previous lows. So what I had talked about yesterday, these previous lows are now resistance, and it seems to be stuck on this rate at the moment. Next report that we're going to have is going to have an acreage area on March 5th, and that's all I have for you today.